All right, so various Q&As coming at you as I'm cooking up some steaks I got from Costco. Got some fillets. Ooh, they taste so good. Oh, man, I'm looking at them right now. Oh, life in America, my friends. It is. Whew. All right, so my man Carl from Washington State writes in, Josh, I've seen you on YouTube. I like what you say. My concern is more macroeconomic, where the economy is going with a 700-plus drop in the Dow last week, and this is before the last couple of days. What do we do? Advisors are saying buy gold or get out of stocks or get out of banks. I do think there will be bank problems in the U.S. in the near future. What do we do? I have some savings, not a fortune. I'm going to be retiring in a year or two and need to protect my savings. All right, Mark, I get this question a lot. You know, if you have, look, there's always a reason to be pessimistic. Always. Pessimism is easy. What's hard is to be optimistic. Pessimism, easy, man. Yeah, I mean, I'm just telling you, if you look at the Time magazine cover, and I don't have it with me right here, from the day I was born. It's actually the day before I was born, but July 6, 1970. And you look at the Wall Street Journal or the Dow Jones Industrial Average and the S&P 500 from that day, and then you look at today. Now, I grant you, that's 49 years later. Are you telling me we're in a worse place, more precarious place now than we were then? It's just nuts. And yet, if you would have put your money in then, you'd be a very wealthy man today. That's just a fact. And I get it. It's 50 years. But, I mean, I don't know. I mean, you're the short term, that's why you got cash. You got to have some cash, without question. I mean, I would say you need 3 years of cash at the minimum, sit on the sideline. That way, if you go through an event like 2001 and 2, 73, 74, the beginning of the Great Depression was 1929, 30, 31, you'll have ample resources to pull money out of your cash without touching your stocks. Oh, man. Vegetarians, vegan, I don't get it, man. I don't get it. I'm doing it to save the environment because of methane gas that comes out of the cows' butts. Yeah, you guys are all, man, I tell you, I hear that, I just laugh. It's okay, do what you got to do. Still don't understand why CO2 is so bad. Anyway, so here's the thing, Carl. You put enough money in cash to leave it so you don't have to touch it, and then everything else you should invest in stocks or pay down your debt. I don't know what your expenses are. I don't know what your debt is. I don't know, but to make, you know, this scenario of a 700-point drop, who cares, man? I mean, the market right now, let's see. So today the market was down. The Dow was down 750 points, the Nasdaq 235, and the S&P 500 is down 81. The S&P 500 is at 2844. Let's take it. Well, I don't know if it's going to let me here because I'm outside. What was the S&P 500 at the beginning of the year? I think it was less than 280. Yeah, here we go. Back in December, back in January, the market, the S&P 500 is about 2,500. All right, so even after today, we're still up. What's that? To 2840, and that's without even counting dividends. I mean, what are you gonna do? I don't know. I just don't worry about it. That's all you can do because there's literally nothing you can do. And forget these stupid advisors saying get out of stocks, I don't know any more than you do, my friend. All right, let me pause this. Got flipped it because you always got to do 5 minutes on each side to get a nice searing, and then you just put it on a low heat for the. I'm cooking steaks. What I do is I sear it. I put olive oil and Montreal steak seasoning. Sear it 5 minutes on each side at high. Right now I got so for my gas grill I got half on charcoal, half on the gas. So you sear it on high on 5 minutes on high on the gas side. You keep it high on that side, then you put it over on the charcoal side and just let it. The succulent juices just flow as it goes low until you probably let it 10 minutes, maybe 15 minutes or so on the low until you get a nice medium rare. It's going to be good, man. And I got to make this quick because I got to talk to somebody here in a little bit. All right. My man Ashford says, what is the magic number Americans need for retirement? And Charles Schwab says 1.7 million. What say I? I just literally could care less what Schwab says. Look, I got no problem with Schwab. It's silliness, my man, because we don't know. I mean, it's 1.7. Why? Why do you? Anytime I hear it, say why? Why do we need 1.7? And just say why. I mean, because of 4% rule, I don't get it. So I don't care. Schwab, do they have an incentive to get you to invest more money? Of course they do. That's how they get paid, man. That's how they get paid. So anyway, I don't care about Schwab's 1.7. Until they answer the question of why do we need 1.7, it's irrelevant to me. All right, so let's see what else we have here. Same guy. Hold on just a second. Let me put it on right here. Congress is considering changes to the way you retire. Here's what can make the cut. All right, we talked about that with the Secure Act. I'm not a fan of the Secure Act, even though I think it will become law. I think you really need to be getting on top of Roth conversions with that Secure Act for sure. Ooh, my man Rob sent me this. He said, Indiana veterans will no longer pay state taxes on retirement income. Ooh, this is good. Let's take a look at this, man. All right, so Indiana veterans will no longer pay state tax on retirement income. Channel 13 in, Indianapolis, I guess, WTHR. So let's read a little bit of this. Indiana veterans will soon no longer have to pay state taxes on their military retirement income. Is that just their... what does that retirement income consist of? Because if it's just their military pension, that doesn't do me any good. Exempts Indiana veterans and their spouses from paying income tax on their veterans benefits. Yeah, it's hoped that the exemption will keep more veterans in Indiana and lure them here from other states. It'll reduce state revenue by $15 million. Yeah, so that doesn't do much for me. Because I'm a veteran, but I don't have a pension. Now, I will say at the end of the day, and sorry I'm sweating, and here in Georgia, right now, oh man, that steak smells so flipping good. I just don't know how you guys who don't eat meat can deal with this. I just, every time, oh man, I just love living in America. I looked, I said 69 degrees. What? That's my stomping grounds of Peaks Island, Maine. But if we go down here to old Alpharetta, it's 89 right now, but it feels like 95. It really does. It feels like 95. Hot and humid. If we go over here to Rapid City, 73 degrees and feels like 74. All right. Let's see. Bernie, Texas, where we live, 98 degrees and it feels like 101. Whew. All right. So let's keep going here. Let's see what else we got. So that doesn't do much for me, the Indiana veterans thing. I mean, it's better than nothing, but then we got military benefits info, states that do not tax retirement pay. 9 states that do not tax personal income. Well, we know it's going to be the big ones. Actually, we got. So I want to do it like this: 9 states that do tax military pay. So the states that do tax military pay. This is according to militarybenefits.info. California, Montana, New Mexico, North Dakota, Rhode Island, Utah, Vermont, and Virginia. Well, that's pretty interesting. Would have thought Virginia, given all the military folks there, would not be one. But anyway, Rhode Island is actually a lot more beneficial on income tax than you think, by the way, as long as you have less than $100,000. 20 states don't tax military retiree pay, but they do have a state income tax. We'll just read them. Alabama, these are states that don't tax military pensions. Alabama, Arkansas, Connecticut, Hawaii, Illinois, Iowa, Kansas, Louisiana, the great state of Maine, Massachusetts, Michigan, Minnesota, wow, surprised by that, Mississippi, Missouri, New Jersey, New York, Ohio, West Virginia as of 2018. Oops, I missed Pennsylvania and Wisconsin. All right, cool, man. Georgia has a provision for any retirement income, including military retiree pay. Taxpayers who are 62 or older, permanently and disabled regardless of age, may be eligible for retirement income adjustment on their Georgia tax return. All right, well, that's just for anybody. Okay, well, cool, man. Good job, Rob. I might have to give that a shake all by itself here. So hold on tight. We'll see what else we got. Sends this article from CNBC that says latest U.S.-China tensions could be the end of the trade version of the end of the world as we know it. For the love of me. Okay, so let's see. As the U.S.-China trade dispute hits another level and hammers financial markets, the bigger casualty of the long term could be the globalization trend that has developed over the last quarter century or so. Only the EU exports more goods to the U.S. than China, making the impact of a prolonged tit-for-tat tariff potentially severe. American businesses begin looking for alternative markets from which to get the goods they have been buying from China, pushing imports down 12.2% from China. Yes, keep that up, man. I know a lot of farmers are getting a little bit hammered right now, but I'm telling you, you got these guys. You got them. They think they're going to sell us, the capitalists, with the rope that we hang ourselves with. It's the exact opposite way, my friends. We're going to hang those communists because they can't compete. They cannot compete. The trend threatens fundamental change to interconnected global economy. Said that the move for the U.S. to levy tariffs on all Chinese imports, which President Donald Trump last week shouldn't come as a surprise, but carries broad implications that may not be fully appreciated. Lingering in the background is a more fundamental concern, namely that we are witnessing the end of globalization. Okay, whatever. All right, I'm going to go check on my steaks. I'll be right. And Dennis from Virginia sent me the Sunday reading from I can never pronounce this word. Ecclesiastes. My pronunciation's always been tough for sure. First reading, vanity of vanities, all is vanity. Vanity of vanities, the preacher says. Vanity of vanities, all is vanity. For so is that a man who has labored wisely, skillfully, and successfully must leave what is his own to someone who has not toiled for it at all. This too is vanity and great injustice. For what does he gain for all the toil and strain that he has undergone under the sun? What of all his laborious days, his cares of office, his restless nights? This too is vanity. Interesting. How do you say that word? I can never figure that one out. And what's the other one? There's another one. I forgot. Anyway. All right, cool. Well, that's good. The Bible's got so many good things in there, my friends. People say, the Bible, blah, blah, blah. I mean, it's a wonderful, wonderful thing. All right, so here are 10 best index funds to buy and hold. All right, let's take a look. So here's the 10 best index funds to buy and hold from Yahoo. Let's see. Because anytime they do iShares S&P 500, iShares S&P Midcap. Okay. They're basically all right. I'm not all interested in that. Sorry, man. It's just gonna be some index funds from iShares for low expenses. That would probably get a lot of good clickbait. I don't care. Here's my man Rob. This is a good one here too. He says the poverty level for the U.S. in 2019 is $16,900 per year. All right, so let's take a look. This is from the HHS Health and Human Services from the federal government. HHS poverty guidelines for 2019. A family of 4 is $25,750. If it's just you, it's $12,490. That's poverty. All right, so if you got a family of 4 and you're making $25,750, it doesn't say this. I never understood. Is that earned income? It's not transfer income. I know that for a fact. So for my family, we'd be in poverty if we had $34,590. Yeah, that's interesting to me. It's just the issue again always comes down to the fact they don't take transfer benefits in there, and I just that's once you throw the transfer benefits, actually you're discouraging people from working. Transfer benefits are welfare, so that's interesting. But anyway, the federal government says if you're a family of 4 and you have $25,750, you're in poverty. If you're was it 200% of that would give you $50,000 for a family of 4, and you're 200% above poverty, which and the median household income is $60,000. That's interesting. All right, let's keep going here. That's interesting. Yeah, let's see what else we got in the old email here. All right, so here's Retirement Safety Net Fund. All right, so here's one from Betterment. Why traditional advice is wrong. Don't keep your safety net funds in cash savings account that give you little no interest. Odds are you'll lose money due to inflation as well on the potential growth of your hard-earned savings. This is a guy from Betterment. I guarantee that they're going to say, use our cash account. Let's take a look here. The risk of holding cash, they're not risk-free. They give you, you lose money to taxes and inflation with nominal cash interest rates hovering around 2%. Money in a traditional account could earn you nothing. Investors safety money intelligently. The better solutions have a safety net and grow it too. For those with a fully funded safety net fund, we recommend investing in a moderate risk portfolio with allocations of between 30 and 50% stocks. Dude, that's nuts. A safety net goal suggests a fit 40% stock portfolio. Nah, no way, man. For a worker around 110,000 salary, a safety net between 18 and might be 18,000 bucks, assuming minimum expenses of 4,500 for 4 months. The saver has two options: put this money into a saving account or invest in. We think investing is a smarter choice. No freaking way. That is nuts. Let me pause for a second. Betterment is pushing for, my man Isaac sent this. Betterment is pushing for you to invest your savings account into equity portfolio of 40% stocks. That's friggin' nuts, dudes. Don't do that. Jeez, man. I mean, just think the example they use: the guy's $18,000 in savings. He's making $110,000 as a year's income. So now he put 40% in stocks, and we get what, a decline of, I mean, we're talking what, 5-6% decline over the last just couple of days alone, and he gets laid off. Let's just say he got laid off. That's just. Look, you can make the numbers any way you want. You can say, if you would invest in stocks then or here, then blah, blah, blah. I mean, you can do that all day long. It's not about maximizing your growth. It's about protecting the downside. The downside is you lose your job and you need money to pay the mortgage. And if half that money's gone because the stock market's getting taxed, forget that. I'm surprised Betterment's saying that. That's nuts. If I were to say that as a CFP, I would lose my license. That's just stupid. I do want to talk about this one. Let me roll this up here. Hold on a sec. Oops. There we go. Oh, yeah. Much better. Now, roll up that. Oh, yeah. Much better. My man Pete said, hey, Josh, I've had a Roth 401k for 10 years. If I roll my Roth 401k to a Roth IRA, does a 5-year wait start over again? The answer is that, and I can't remember if I answered this or not. The answer is yes, absolutely. So if you have a Roth, so what happens is, and this is interesting actually, and I had to look this up. I did not know the answer to that, so I appreciate the email, Pete. What happens is when you have a Roth IRA and you have a Roth 401k, the Roth 401k needs the 5-year rules based on that Roth IRA. So if I have a Roth 401k and I roll it to a brand spanking new Roth IRA, I need to wait 5 years before the money can come out tax-free. If I had the Roth IRA opened 5 years previously and I then roll my Roth 401k to the Roth IRA that was open 5 years ago or more, I'm fine. Isn't that interesting? So I did not know that. I had to do some research on that myself. But just remember that when you're rolling your Roth 401k to a Roth IRA, the 5-year rule is contingent for how long that Roth IRA has been open. So double check that, and that's another reason just get that Roth IRA open ASAP so you can have one if you are going to receive Roth 401k distributions to it. All right, I think we'll call it a night here for this. I'm going to go and eat some steaks. We'll see you next time.